Hi everyone, and welcome back to Next Generation Business School, where we empower future leaders in business and finance. My name is Amin Shakulu, and on this channel we dive deep into accounting principles, tourism accounting, financial management, business strategies, and economics insights. So stay tuned and let's unlock top strategies to help you excel in your studies and future careers. Please don't forget to like, comment, and subscribe for more valuable contents. And remember, every expert was once a beginner, and with the right knowledge and determination, you can achieve greatness. Your journey to success starts here, so let's get started together. So, as we can remember, in the previous lecture, we analyzed with together an economic events that take place under the perpetual inventory system. And the subjects of this economic scenario or event was purchasing 20 sets of high quality camping tents on account mode. And each set price was $300. So 20 multiplied $300 equal $6,000, the total amounts of high quality camping tents. And because this economic events is purchasing that take place under the perpetual inventory system, this double accounting records includes two accounts. First, inventory, as we can know, the purchasing always increase inventory. Inventories is belong to assets. In fact, inventory is sub accounts of assets, and increase in inventory always considered as debit. And the next effect of this purchasing is on accounts payable for other essential suppliers. Because this purchasing take place in on account mode, it increase outdoor essential suppliers account payables, and increase in accounts payables is considered as a credit because account payables is belong to liability, and increase in liability accounts considers for recording under the credit. But in the next economic events, we want to consider with together a variety of events that could may take place, and we should be able to identify them and record them properly. And the next economic event subject is selling something that take place by the institute. Here the institute is Adventure Gear Store. Okay, next economic events that take place under the perpetual inventory system. Let's see together what is this economic scenario or event. Let's say on September 7, Adventure Tours sold 4 premium vacation package to RJ Travel Agency for $2,000 per package on account mode. Additionally, the cost of each vacation package to Adventure Tours is $300. And we want to record both sales and the cost of goods sold in journal entries. So first of operations is to consider the journal entry through explanations. As we can see here, under the perpetual inventory system in merchandising tourism company, some selling take place. The company sold 4 premium vacation package in the merchandising company under the perpetual inventory system. So in these conditions, we want to consider two different recording, or record the selling should take place in two different levels. The first level is record the revenue from the sales, and the next level is to record cost of goods sold to reduce inventory. So here we have the first record to record the revenue from the sales, and here we have record the cost of goods sold and reduce inventory. But which double accounts should be considered for each level? For level 1, that was for record the revenue from the sales, two accounts are accounts receivables and sales. So 4 is the number of premium vacation package, and $2,000 is the price per vacation package or per unit. So 4 multiple 2,000 equal 8,000. We have 8,000 increase in account receivable. Account receivable is belong to assets, and every sub assets accounts increase should be considered as debit. So the account receivable become debited by 8,000 by increase in that. The next account is sales. The sales is considered as a revenue in merchandising company. In fact, in merchandising company, instead of revenue, we say that some sales take place. So this 8,000 is amount of increase in sales, and we know that every increase in sales should be considered as debit. So sales become credit should be considered, increase in sales should be considered as a credit, and sales become credit by 8,000. So this is the summary of the first level of recording the selling. First, account receivable 8,000 debits and sales 8,000 credit. In the next level, where we want to record the cost of goods sold and reduce inventory, we should use two accounts. Under the perpetual inventory system in merchandising companies, we always use the cost of goods sold to record of the cost that reduce the inventory. So the cost of goods sold is for the number of the package sold multiple the cost of each package, and in this case equal 300. So 4 multiple 300 equal $1,200. Cost of goods sold increase, and increase of cost of goods sold is totally different with sales, because increase in sales always considered as a credit, and because cost have a different identity with sales, totally different identity, increase in cost should be considered under the debit. So increase in cost of goods sold consider here as a debit by $1,200. And also the amount of inventory in this case is decrease, because we should take some products from the inventory and sell it to the customers. So the total level of inventory is decrease, because decrease in inventory considered as a credit by 1,200. Inventory is belong to assets, and decrease in asset sub accounts considered as a credit. So inventory become credited by $1,200. So in the level 2, we have cost of goods sold that considered for perpetual inventory system, and decrease in inventory that considered as a credit by $1,200. How now we know that how we can record sales transactions in perpetual inventory system by making these inventories, and businesses can accurately track their revenues and their associated their costs. In fact, the double entry or submit the sales in two different levels give us these facilities to track or inventory, and also track the costs that associated with revenues. Okay, let's look with together what happened in the next economic scenarios. On October 1st, Adventure Gear Store paid Outdoor Essential supplier $7,000 for camping tents purchased on 1st of September. In the perpetual inventory system, when a payment is made by a supplier to previous purchase on account, we need to record the reduction in our liabilities. So account payables is reduced and the decrease in also cash take place. So we should consider two accounts for these economic events. First, accounts payable is reduced because we pay our liability and general level of liability is decrease. Account payable is belong to liabilities and decrease of liabilities should be considered as debits by $7,000. So $7,000 for account payable become debited, and because we pay this liability from the account payables on cash method, the total amount of cash is become decrease. Cash is the most famous of asset sub accounts, and decrease in assets considered for recording as credit. So 7,000 become credit for cash. Now we knowing how to record the payment transactions in perpetual inventory system by making these inventories. And also businesses can accurately track their liabilities and cash flows in these recording methods. Let's look with together what happened in next economic events under the perpetual inventory system. The next economic events take place on September 7. On September 7, Adventure Tours collected $4,000 from MS Travel Agency for their purchase of vacation package on September 7. For journal entry explanations in the perpetual inventory system, when a customers pay their outstanding balance, we need to record increase in cash and decrease in account receivables. So as you can see here, we should consider two accounts, cash and account receivables. So cash is increases because customer pay their debts. So these accounts become debited because we increase the cash balance. Cash is belong to assets, and increase in sub accounts of assets consider of debit. And next account is account receivable for MC Travel Agency, MS Travel Agency. This account credited by 4,000, and 4,000 is the amount of debt. And also this account become credited because we are decreasing the total amount of accounts receivable. So generally we should debit cash by 4,000 and credit account receivable by same amount because we use double entry accounting systems. And now we knowing that how to record the collection of account receivable in the perpetual inventory system, and by making this entry, businesses can accurately track their cash inflows and outstanding receivables. Next, we want to consider what happened in the next level of economic events or in next economic scenario. Taking a physical inventory. In the taking physical inventory, we conduct a physical inventory counts.